The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, so much for the rally that we saw on Monday throughout the grains and oil seeds. We gave it all back and then some on Tuesday's trade, led by the soy complex. What happened with the washout there? Spring wheat did its best to kind of hold close to unchanged with some of the planting concerns in the northern plains. We're going to talk about all this and much more. Joining us today with agmarket.net, we welcome back to the program. Jacob Burks is with us. Jacob, good to catch up with you, buddy. I hope things are going well.
Well, yeah, it's going well. I love how you call me on these days where there's nothing but red. But yeah, everything's good here.
Yeah. Well, I hate to do it to you, but somebody's got to talk to me on a big down day like the one we saw on Tuesday. Man, oh man, I think we were all thrilled, happy with the big up day on Monday. And coming out of that WASD report with a few surprises thrown in there, and then we come here to Tuesday and we give it all back and then some. I mean, was it just, in your eyes, was it a case of just profit taking on that big rally Monday? Does it feel like that was what really led it, or was there something else that I missed here, Jacob?
Well, yeah, I think that the way we closed on Friday and some of those markets gave a little bit of life to some of these funds. You saw a big short number in the commitment of traders on Friday after that report. The rally all day yesterday, it didn't feel strong. It felt like a breath of fresh air, but it's nothing I feel like said, okay, this was a good supportive bounce. Go get all the longs you can. It never felt that way. The one positive thing that the markets have been hanging their hat on is this wheat rally that we've seen. $1.70, I think, in 2 days or 2 weeks. So that's been the strength of the market. We kind of caught the coattails of that wheat market yesterday, and the corn never really felt like it wanted to rally all day yesterday. It just felt like it had to stay up there just due to the wheat market. But today I feel like what we saw on Friday was real. If that happens, then the market direction is correct right now. And so I think that's what the market's trading today is the fundamentals of, hey, we have premium in this market. If we're going to have this big of a yield, this big of a production.
Well, and obviously planting progress is a big key this time of year. Now that we've got past this big May WASD report, we look at Monday's numbers. We advanced quarter bean planting nationwide. It was a little slower with some rain out there, but Northern Plains continues to be where the delays are, yet the planting window this week looks to open up pretty wide for a few days here. So the market, traders, still feels like they're anticipating that we're going to get some good advancement here this week nationwide, including in the Northern Plains. So maybe that's why, although we held close to unchanged in spring wheat, we were a little timid in the wheat markets on Tuesday, I think.
Yeah, I mean, we're seeing that if there's a little bit of a bright spot, it's still in that wheat market. And I think you said the key word right there, Jesse, is we had a pretty big growth. The reason we weren't just blasting it out of the water is because we did have water. But we had a lot planted last week, and then all of a sudden you come in and you throw some really good rain coverage across a big part of the Corn Belt. Where we didn't get some of the rains, kind of the places that didn't need rains up in the Northern Belt, and so. Not going to, by any stretch of the imagination, say this is a perfect growing, start to it and a perfect planting season. But man, it's a pretty good planting. We've got a lot down south that's already in, getting moisture on some of that, and now you're starting to talk to these guys. The areas of complaint that I've talked to has been over in that Ohio, Indiana area. Those are some guys there that are still kind of tapping their toes and twiddling their thumbs, waiting to get a lot done. So we'll see how that goes. A lot of guys need to get some spraying done over there too that haven't had a chance to get back in.
Well, looking at this market, let's talk a little risk management. I think that is pertinent here in this time frame. Let's start with old crop, and obviously, anyone who's hanging on to old crop, this market has still remained somewhat inverted. It feels like, Jacob. A lot of end users trying to pull supplies out of farmers' hands, corn, beans, etc. Limited supplies of old crop there. And any thoughts as far as old crop here? It feels like to me, probably if someone's hanging on to any old crop supplies, they're gambling with them at this point. But is there anything you can speak to on the old crop side that farmers need to be thinking about here in this time frame?
That's the phone. That question. There's the phone call you like to avoid this time of year. Is what do I do now? Oh, I didn't do that. I didn't do this. What do we do now? And I think you're exactly right. There's still two stories to this cash market. It's still the Western Corn Belt and then the river market. And we're starting to see the SIF back off. We're starting to see some cash bids back off along the river. There's just the export program's just not as strong as it needs to be. You still have some decent, obviously, we're still inverted. We still have some great cash offerings, got some great basis levels still over there, but they're backing off. And so if I'm going to tell somebody what to do, we love to say the word flexibility. We love to use those terms and to stay, flexible in the market. But there's a point where there's time to be done. The flexibility rolls on to the next year. And, we've said for a while, don't have anything but your gambling bushels. So you are gambling with those bushels. If those are the bushels that you plan on holding just to see if there's a weather problem and then they come in strong with that basis, good luck to you. I hope you win. But right now, if I'm looking and worried about my operation and worried about my whole budgeting and capturing that equity that I need, be aggressive, making some sales. You can play the flexibility on the top side if the futures make a big move.
All right, let's shift over. Let's talk new crop. I think a little more important there at this juncture. But, I look at D's corn, that $5 level, Nove beans, that $12 level. These are scary psychological levels that I think a lot of farmers don't want to see us flirting with these levels so much, but yet here we are. So what's your take on that side of the equation, Jacob? And what should we be thinking about risk management wise?
Yeah, it's dangerous when you see that handle move from a 5 to a 4 and a 12 to 11. That's very psychological. And speaking of that, like what options do for you most of the times is give you that psychological comfort. And so we have used a lot of options now as a risk manager and as a producer. Like what you have to work through now is how do you manage everything? Okay, so what do you do with the put options that we use on a short-term basis? Some people just protected it for the report last week, and now we have this week. We have to make a decision. But what are we going to do with these options? What are we going to do with these? And what I've been looking for is kind of break it up into how aggressive have you been? What have you done so far? And if you've been actively making some sales, hey, we got some $5 support. Maybe that's these options. We need to take the profit in them, take them off, and let's look at making a better opportunity if we get that bounce, that weather bounce here later. If we hold the $5, things of that sort. If you haven't, a 5.15 sell or a 5.10 sell even right now, it's still got a 5 in front of it. And so maybe that's what we need to do. If those turn into futures, then we need to look at staying flexible. We can put a call spread on the top of it and hope for that bounce. But we're at a level right here that if you look at the cash side of this thing, if we take a 30-cent basis off these futures right now, there's some guys that are getting into that non-profitable stance. And so, if 506 right now is not profitable, neither is 480 or 450. And so I think that using these type of risk management tools and maybe even just staying short term, maybe we roll the puts and just kick the can down the road just to keep that protection, because the psychological standpoint is about how you handle this and how you act. And if all of a sudden you're at 480 and you get just, unwilling to make any sales or unwilling to act, then that can be very detrimental to your operation.
Well, and that's a good point, is having those tools in the toolbox and utilizing them, leaving the top side open, maybe kicking the can down the road a little bit to see what happens, because we do have some different things in front of us here. We have this Black Sea grain initiative that we don't know if it's going to get renewed. If it doesn't, could that give us a premium into the market again? Plus, planting with the slow pace across the northern plains, we're going to be running up against some insurance dates here pretty quickly. Could we see some prevent plant taken? Will that affect anything enough in the market? Probably not, but still could. There's few things here, of these little minor black swanny type things that could give us an opportunity to add a little bit of premium back into this market. So I would think having that flexibility to leave the top side open is definitely key for a little while.
Yeah, you look at typically, you even in 2013, we compare this a lot. You've had that opportunity to get back to those pre-report highs, the pre-planning intention highs. So there is a lot of optimism from a technical standpoint. There's always a some type of weather scare. Just where do we come from? So there's a lot of. I'm staying optimistic. I'm not here to tell you to sell the farm. We get short everything you can. I think that you should be prepared that this might be the best price you see the rest of the year. You should be prepared for that. Crossing your fingers is not a great marketing plan, but there's a point to where we got to, put something in place and let's cross our fingers and hope we get a better opportunity.
We are talking today with Jacob Burks of agmarket.net. He's our guest analyst on the program. Jacob, let's talk livestock here, and let's start with this cattle market. And mixed bag on Tuesday, and really cattle here since the last time you and I talked, really the last few weeks, it feels like we've been a bit choppy in cattle, especially in the fat cattle trade. So just 1,000-foot view, what's your take on this cattle market right now?
A little bit of choppiness up here at the highs is not a bad thing. I mean, we've made a big long trend up. We're at levels at 160 in June, 162. We saw the cash in the South trade a little bit lower here today. You got an opportunity to see a pretty good pullback. We pulled back a little bit, kind of got to bend your knees to jump a little bit. So I do feel like we're at a level here where the market can get a little bit exhausted. You look at what we're seeing in the box beef, still over $300. With as many macroeconomic fears, I do feel like it's worth risk management at this level too in the cattle. I think that as we go forward, we're going to have to cross our fingers again. That this economy stays strong enough that the retail side is still willing to pay that $300 on the box beef side. But I think right now that choppiness is okay. We've seen enough recovery here in the last couple of days that we're still back up into those upper echelon of prices.
Well, and I think, too, a couple thoughts. Traders going to be probably squared up positions here later this week ahead of the cattle on feed report. I mean, we anticipate that report's still going to show a small herd here. And then, obviously, back on Friday, we did get some beef production numbers from the WASDE report that I know have had a little effect on this cattle market. So there's a few of these type of items out there as well that we can't lose sight of and forget about, I feel like, in this cattle trade, Jacob.
Yeah, you even saw some decent exports last week, which kind of surprised us. We're not expecting a whole lot out of exports of beef here with as high prices we are, as many trade problems as we seem to have had throughout, and as aggressive as some of these other countries have been. But there's people are still wanting to pay for premium beef for the high quality, which is nice. And I think that having those type of moments where you get some extra demand, that's going to do nothing but benefit us. You go from this Memorial Day to the 4th of July. This is a big opportunity for the proteins, and this is this grilling season. The weather's starting to break, starting to become summer and spring around the northern part here, and I'm looking forward to seeing what happens with our disappearance, and we need to see some of that cold storage back off a little bit. And that goes right into your hogs. We've seen 2 days now of triple digit higher here in the June contract. So this is an exciting 2 days that we finally maybe have seen a little bit of bottom. And if you look at that rally too, Jesse, on the hogs, that was mostly led by this pork cutout futures contract. Maybe not led by that, but that's been the result. It's been these cutouts, and I think you're going to start seeing that with a little bit of growth in the in the retail side of some little bit higher pork prices, and that could drag along this hog market.
I was going to say, with hogs, I mean, nice to see a bit of follow through. I guess we'll take it, considering how volatile this hog market has been, Jacob. Hopefully,
2 days, we're good.
Yeah, 2 days. I'm hoping maybe for a third on Wednesday if we can get a little more follow through in hogs. You mentioned the economy a little bit, and I want to finish up on this point with you here today. Obviously, there's a lot of outside market concerns. This whole debt ceiling fight is, I think, on traders' minds. And then you just watch the recessionary fears in the stock market. Energies have kind of leveled off again, crude around the $70, $71 mark. As you take a broader look at the economic concerns that are out there and things that kind of parlay into the grains and the livestock trade, what's your take? What are some things that we just need to keep in the back of our mind here the next couple of weeks ahead?
The one thing that was said, you can make a lot of money when you have high prices. You can make a lot of money when you have high cost. when you have low cost, a lot of times lower prices comes, right? And that's kind of what we're seeing is the commodities have been a great inflationary hedge for some of these bigger hedge funds. Okay, and as we work and our Fed works to decrease that inflationary situation that we're in, they have to keep doing this until there's pain felt in the jobs. And that's and when you see the continued rate hikes, but you're not seeing the pain felt across the country, and wages are still higher. Your increased and unemployment's not meeting the satisfactory level. Mm-hmm. That 10,000 foot view right now just continues to make me fear that commodities are going to take the brunt of this as we continue to raise interest rates. It just kind of the writing's on the wall that there's going to be less interest. A lot of people cuss high prices or high costs. A lot of people also cuss the funds being involved in the market. And man, we've really benefited from the funds being in the market for the last couple of years. And if that starts to pull back, as you're starting to see it, and you're starting to see the more of the index funds trade in the style of a managed money style, to where they're not scared to get short the market. And I think that for me scares me the most about what could happen in the commodities, because as fast as it went up and as fast as we can make a rally, it goes faster on the way down, and it could be and we'll overshoot the runway. That's what markets do. They overshoot the runway. So eventually we'll overshoot it to the downside, which again in itself is scary as well.
Very, very scary. Well, and again, as we think about this and making sure that you take care of yourself and manage that risk, I know you and the team there at agmarket.net can help folks if they have questions. Jacob, what's the best way to reach out to you guys and have a conversation?
Well, first of all, the best way to get our information, just go to our website. We do a 30-day free trial of our intel. We got several different reports that we can send to you, and we'll help you pick and choose which ones you need. But you can just give us a call here, 608-384-5438, or look us up at agmarket.net. And you can find us on the About Us page and look up our team there and talk with whoever you want.
Well, we appreciate the time. I should say as well, congratulations. I know the news came out a few weeks ago. You were made a partner in agmarket.net as well. So glad to see that news. And we look forward to continuing to talk with you down the road, my friend.
Oh, man, it's an awesome team. I'm glad they let me in. And, yeah, I appreciate y'all having us on.
Definitely. Jacob Burks with agmarket.net. Thanks for joining us here today, my friend, and have a good week. We'll talk to you soon.
Hey, you too.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.